Hello folks, welcome to Pro Trader Strategies Market Commentary for Thursday, May the 6th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environments, and how those come in to impact the markets with some of my market analysis. I'm going to do the same thing in these daily market commentaries, but I'm also going to talk about the option strategies I implement into my portfolio based on those assumptions we come up with in this market analysis. Further, I have webinars where I streamline the process for you guys to find the optimal option strategy for any given assumption. What we do is we look at the pricing of the options, and that will determine whether or not we are buying options or selling options, right? We want to buy cheap, sell expensive. I show you how to spot that quickly in those webinars, so please check those out. All right, let's get on with the economic data, see how the markets are reacting, and then talk about some equities there. All right, across the pond, we got German factory orders coming in at 3%, expected to be 1.5%, so doubling the expected number and a revision to last month's number. That is obviously good, as we have been seeing a bit of a mixed bag. Most of the manufacturing out of European region doing better. Remember, Germany and France, the leading manufacturing sectors of the European region as well. Great Britain final services PMI coming in at 61, expected to be 60. Now let's jump back over here to the United States, because Great Britain did have their official rate remain unchanged at 0.10%. All right, so let's get back here to the United States. Here in the United States, we got the unemployment claims precursor to our tomorrow's non-farm payroll number. This came in just under 500,000 at 498, expected to be 540,000, so lower by better than close to 42,000 there, but the revision to last month's number was almost a complete revision to the upside by close to 40,000 there. A non-farm payroll productivity, 5.4%, expected to be 4.3%. So showing productivity, non-farm productivity is increasing there. Labor costs are not increasing as much as expected. Not really what we want to see here, but we saw it come in at negative 0.3%, expected to be negative 1.1%. So labor costs are increasing. That's going to possibly hurt those the businesses as their inflation, wage inflation is increasing here. All right, we're going to have to be able to see if it is offset to the consumer here going forward. And then Williams is also speaking. He's an FOMC member. And finally, we got the natural gas storages coming in at 60 billion cubic feet, expected to be 66 billion cubic feet. Oh, one other guy, Bostic, is speaking a little bit later on this afternoon. All right, crude oil continues to slide. After yesterday, we saw that big drawdown in crude oil. It was at negative 8 million barrels, a drawdown of 8 million barrels, expected to be a drawdown of 2 million barrels. I would have expected us to get a little bit of buoyancy here, especially with the manufacturing numbers coming out better. Well, that's why the markets are the markets. It continued to sell off throughout the day. Off of that high, it was almost looking like we were going to test that 52-week high there of, let's call it $68, 2 pennies shy of that. But throughout the day, that weakness just kept leaking into the market as we were seeing the tech sector really sell off. It's continuing to see some of that follow through today, as we'll get through these markets quickly here. Bitcoin just slightly off on the day yesterday. All of the cryptos were having a heyday. Even Doge, which is basically an NFT, which is a non-fungible token, because it doesn't have really a value. Some people might say that all of them don't have a value, but at least there's a finite number of something like Bitcoin that there is a limited supply of this, so that could drive demand. Whereas Doge is something that can just print as many as non-fungible tokens as you want. All right, so we're seeing gold move higher here, back into that 1800 handle here, we can see on the day. So are we going to be able to hold on to that? Now, that's more of a psychological number. I've talked about it. Once we get above that 1780, that's the push to the upside, and that's why we're seeing that follow through into the 1800s today. All right, blowing through that psychological level there. Bonds up a half a point on the day. VIX is moving higher. Why? Well, Dow Jones is in positive territory. Well, we're still seeing that rotation, like I said, out of tech and into some of these blue chip or the boomer stocks, as some people are starting to call them. That is causing this buoyancy in the Dow Jones, as we're seeing the NASDAQ continue to see some weakness, down another 76 points on the day today. But we're going to have to keep an eye on this. We've talked about this trend channel coming back down to test that. It lines up nicely with that 50-day simple moving average. So adding more validity to that trend channel at this point in time anyway. And then we've got the E-mini S&Ps. Yeah, they're in negative territory on the lows of the day pretty much too. But holding on to at least a respectable day here where the NASDAQ doesn't really seem to be carrying. E-mini S&Ps, again here on the breakdown, this is a 30-minute candle chart here. You can see off the open we saw some weakness. That was off of pretty much better than expected earnings out of Penn. Penn is starting to sell off based on that. We got MGM. I thought all of the casino stocks were going to do very well. I mean, we were seeing 70-80% occupancy in their hotels, which is basically sold out for the most part going forward, and they're still seeing some weakness here. I don't think that was priced in to earnings for the casinos, and we're seeing some weakness today. Could be opportunity for buying. As you can see, MGM and some of these other stocks are coming down to some key levels that we might be able to take advantage of here. So let's take a look at the equities. We got WYNN. Now, I got into WYNN based on, I was looking at Yahoo's website yesterday afternoon, and they said that the earnings were coming out. And it was to be announced kind of thing. So I thought it was going to be in the afternoon since I hadn't heard about it. So I scrambled to get involved in WYNN to sell some puts in there because I was bullish in this whole sector after hearing all the information coming out. And I decided to go in there and sell the May that expire on Friday, tomorrow, before their earnings, and sold the, what did I sell? The 122 puts in the May weekly. So 122, you can see I'm very close to that, expecting a push to the upside off of that earnings. Well, I didn't get involved on their earnings. So I'm going to hold on to this for a little bit longer here and see how this plays out. I'm still bullish in this sector. I think that this little bit of a sell-off is just kind of a head fake here. So I'm going to stay in this despite the fact that I was playing it for earnings, got suckered into it, but I'm going to play this one out. So let's take a look at Penn. I got involved in this stock before the earnings on the pullback here. I've gotten in and out of it a couple of times here. You can see move to the downside. I'm not doing anything at this point. I might start adding a little bit more here at about $75 in Penn. That's going to be something that's going to be very interesting to me. If you guys remember, I was doing that with the I lost my train of thought there. Sorry. Anyway, so if it gets back down, I was selling the puts down there at around 75, and that has to do with lining up with this trend channel here and the Fibonacci value area high, all of those things lining up quite nicely. That will be a major support area. I'd be happy to add a little bit more at that level. All right, and that's it. That's all I've got for you guys. Today we're going to be doing a webinar on synthetic longs. So if you are looking at a stock, maybe say Penn, and you maybe didn't have the money to put up for something like this, well, I'll show you a way to create a strategy that will perform exactly like the underlying, dollar for dollar, but you will have to put up about half as much money to trade the stock to make it feel like you actually bought the stock. It will perform dollar for dollar, and I'll go through all of those details today, when, where, and why you would use this strategy over, say, stock or even just a long call. So I'll go over all those details today, so please check that out, protraderstrategies.com. Finally, hey, smash that like button. If you've taken anything away from it, it helps us out here, gives us a little bit of feedback. We know what's working, what maybe not. And finally, comment at the bottom. If there's something you guys want me to cover in these webinars, I would be happy to do that. So please reach out to us. And if you have any questions, comments, obviously I'm going to make sure you guys are clear. So I will respond to anybody out there. All right, that's all I've got. So, other than if you can't smash that like, take that or take it easy. Take care. Oh, check out the disclaimer too.